Good afternoon. This is Jeff Unalp, and I'm here with another video blog regarding year-end deductions. When I meet with my clients, we talk over what their tax strategy is. Are they making too much this year? Do they need more deductions? Or do they need to defer deductions until next year when they plan to make more? That's a question that you should be engaging with your CPA. And at Unalp CPA Group, we want to engage with our clients to help them minimize their taxes. And potentially, by moving income from one year to the next, you can be more tax efficient, shall we call it, which means that you will pay less overall. So that's our goal. So with that in mind, let me share my screen and we can talk about deductions. So this is being presented on December 5th, 2022. What we're going to cover in this presentation are moves that you can make without spending additional cash, purchasing an auto, retirement, and other items. So moves to make without spending additional cash. Now, first of all, let me point out that these moves that you can make, you need to be a cash basis taxpayer. If you file a 1040 and file your own business as a Schedule C, you're going to be a tax basis taxpayer because 99.9 times out of 100, a taxpayer that files a 1040 that has a Schedule C attached is a cash basis taxpayer. And what that means is that you do your accounting books based on when you receive money and when you pay money out. If you are an S Corp or an LLC, then you need to look at your return to determine whether you're a cash basis taxpayer or an accrual basis taxpayer. If you're an accrual basis taxpayer, what that means is that the expense or income is recorded at the time that you actually, at the time that the services are delivered or the expenditure becomes due. So for instance, just because you're invoicing a client, let's say you're an accrual basis taxpayer, if you invoice a client in December because you provided the services then, that means that that income is going to be December. If you're a cash basis taxpayer and you don't get the income, the payment until January of next year, it's going to be a January payment. So if you can see how that would affect your taxes. So you need to look at your return and determine whether you are a cash basis or an accrual basis taxpayer. Very important to determine before you decide on these moves. So when I say moves to make without spending additional cash, what I'm talking about is cash that you would spend next year that you're going to spend this year in order to get a deduction. So you may need to take out, you may need to put something on a credit card, you may need to take a line of credit to do this, but these are moves you can make and then you can recoup them. And I've used these when I've done my own planning. So the first one is to prepay expenses using an IRS safe harbor. And the safe harbor allows cash basis taxpayers to prepay and deduct qualifying expenses up to 12 months in advance without challenge from the IRS. Now, caveat, these need to be ordinary and necessary expenses. You can't go to Hawaii on a pleasure vacation and expect to get the deduction for these. So they have to be necessary to your business and ordinary as a business would spend. And so these could be rent, lease payments, business and malpractice, insurance premiums, or other things that you may have. Make sure you track them and you have the evidence of payment. In other words, when you're paying them out, make sure that you're going to track it. If you send your landlord a rent payment, make sure you send it certified return receipt or some way that you can track it, that it was sent on December 31st and that they received it afterwards. Now, the other thing you can do is stop billing customers, clients, and patients. Don't send the invoices in December if you're trying to push your income to next year. You can also use your credit cards correctly. The date of the charge is the date of the deduction. If you want the deduction this year, make sure you charge it on the credit card this year. If you're pushing it to next year because you want more income this year, then you're going to make sure it's next year. Don't assume you're taking too many deductions. So if you're trying to reduce your income and you can take as many deductions, don't worry about losing them. You're going to get a net loss carry forward if you have too many deductions. So I wouldn't worry about that. That net loss carry forward can be used against income in out years. And then make sure that, I mentioned this, make sure that the deductions you take are necessary and ordinary, and that you document those deductions. Now, purchasing an auto. You can purchase an auto and place it in service by 12/31/2022. That means you at least have to drive it 1 mile to show it was placed in service. Do not lease if you want this deduction. Now, you can elect 100% bonus depreciation, which allows you to deduct 100% of the vehicle over 6,001 pounds. Make sure you talk to your accountant before you buy, since this is a huge move. So I will emphasize that again. Make sure you're talking to your accountant about a move like this. Talking about a $40,000 or $50,000 car, you want to make sure you're coordinating these moves with your CPA. You can elect out of bonus depreciation, get a smaller deduction if you approve, if you choose, but those will be spread over multiple years. And make sure, another point that I often see that's done wrong, make sure the car is titled in your S Corp or LLC name if you operate it for the S Corp or LLC. And make sure you're tracking your mileage. What do you drive for personal? What do you drive for business? Because at the end of the year, you need to make sure, in order to keep it at 100%, that you're basically paying for those personal miles. Purchasing equipment. Buy your office equipment or machinery and place it in service by 12/31/2022. You can elect bonus depreciation and get 100% deduction. This includes new and used personal property such as machinery, equipment, computers, desks, furniture, and chairs. Now, I do want to point out this item here, QIP, Qualified Improvement Property. This is an improvement made to the interior portion of the building, which is non-residential real estate. If such improvement is placed in service after the date the building was first placed in service. So this, you place the building in service, then you come back and do some modifications to the interior. This could be QIP. QIP is eligible for 15-year and eligible for immediate deduction using 100% bonus depreciation. Again, please coordinate with your CPA before you spend the money, since this could be a huge move. All I'm trying to do are bring ideas to you that may help you, but you need to coordinate them with your CPA because everybody's tax situation is different. And finally, retirement. If you have extra cash available and have employees, get busy and put in a retirement plan, a 401k in place so that you can obtain a tax deduction in 2022. You'll need to speak with a financial planner or a TPA, third-party administrator, as soon as possible. They need time to create the plan. They will create the plan and it will document how you can make contributions, but do that this week. If you don't have employees, discuss with your financial planner how to create a SEP, a simplified employee pension plan, and fund it by year end. So definitely, I want to make sure that you take advantage of these deductions I'm happy to discuss this with anyone, but I certainly wanted to bring these to your attention so that you can at least plan, do some planning now, and possibly save some money on the 15th of March, April, or if you file an extension, September or October. So thank you. I hope this has been helpful, and I look forward to talking to you again. Bye.